Good morning all and welcome to today's video. So today I have just the one pair on watch and that is Kiwi CAD. I'm just going to switch to dollar yen ever so quickly and just tell you why I took this one off of watch. You can probably see why by now, but I'm going to break that down anyway, just tell you why I took it off of watch. So previously, just to recap very quickly, we had this double top here. We came back round, tapped into this double top, and we had this near miss here to this low. Okay, so price narrowly missed that low, giving me a clue that we could potentially be seeing a move down to this low because of this near miss and because we tapped into that double top. Okay, and then we had slight conflicting arguments on the lower time frames. We had this reversal structure here into this sharp move down, followed by that sharp move up, suggesting that there was liquidity here and that potentially we could be tapping into these highs because normally we break above them on the higher time frames before that longer term move to the downside. However, there was a possibility that we could have capitalized on a move to the downside in the meantime because we had this 1, 2, 3 touch structure, okay, leading into this sharp move here, this sharp move up followed by the sharp move down. So I was looking for, if you remember yesterday's forecast, a break below this low here to confirm, and I think this is key, and that's why I'm touching on this first, to confirm the move to the downside. Now, if we just for a potential move down to here, okay. Now, if you look at what price actually did, it wicked. This is another prime example of why we trade, why we wait for these little tight corrections, because what happened here, okay, we wicked below that low that I was looking for a correction below and then pushed back up. This was the key clue for me when we did that. Price found some kind of liquidity here to send it to the upside. Okay. When I see that, that's normally an indication that we're going to push higher. So if you were to set, the reason I bring this up is because if you was to set an order here to get short, you literally just placed an order just under here, as opposed to waiting for what I was waiting for, which is the correction. Then you would have been tagged in, tagged out for a very, very quick loss. Okay. So this is why I say the confirmation that we look for to confirm the idea in many instances is this. Okay. Because that would suggest that price did not find enough liquidity here to send it to the upside. If it corrects like sideways like that, that would suggest that that's the banks and the bigger players stacking the orders for the move to the downside because price found enough liquidity here to send it to the downside. Okay. So when it doesn't, and when it just wicks below and wicks back up, that's a strong indication that potentially we may be moving to the upside. Okay. Last night I still had my forecast on and I was looking for I've just changed my forecast. I was still looking for a break below, because if we were trading through that, we came back down and we were trading through that, then we would be below this high, and if we did correct through that, then that would suggest that there was not enough liquidity at this wick to send it to the upside, if that makes sense. But one of the reasons I took it off of watch, and that was the initial clue that we may push higher, is because if we just zoom out and we look at how far price has pulled back, that's now price is now pulled. This was kind of the line in the sand, okay, because this was just over 50%. We've now pulled back about 70% of the move, okay. So if we were going to move to the downside, this was kind of the line in the sand. We don't normally see pullbacks more than about 50%. So I'm happy to take this off of watch. Will I consider getting long on this pair? I will, but I would want to see a slightly more developed structure just because of how prices moved up. And if we got something in the region, something more in the region of that, then I would consider getting long, because that would give price volume to move up to potentially take out these highs. But I'm just going to let that do its thing. I thought that might be a nice little mini lesson there. As I said, when we see those wicks there, that's if it wicks below, wicks back up, that's a prime example of why we look for the corrections afterwards. Okay, so Kiwi CAD, just moving on. So in this instance, this is interesting what I'm seeing here. So previously, the reason I had this on watch, this is one of my wild card, my additional pairs, which was just a kind of one that I wasn't anticipating shaping up, but which may have done. I was actually looking for not what I'll be looking for today. What I was actually looking for is for price to tap into this area here, because we kind of had look at all these near misses. Price keeps wicking the very, very sharp area there, followed by a sharp move down, and price keeps wicking and near missing that area. So what I was looking for is I was looking for price to tap above, then come back down below these wicks to correct, and then for a move down to here, and then potentially we look to get long, because this has come from an impulse, so we could have been seeing that impulse correction continuation. However, what price has done is come down to the base of this potential impulse correction continuation. And if we just analyze the structure, you can see we have this low here, we have this area of value, price comes down, it near misses the area of value, tries to push up, but all the orders that were down here and being placed in this area, because we didn't tap into it, have dragged price back down, which is how I'm seeing it at the moment, at least. Okay, and if we just take this, we have this impulse correction continuation down there, which may suggest we may push a little bit lower, but we've kind of filled 90% of that move. This suggests that perhaps this is a completed impulse correction continuation, which just so happens to line up with our area of value, okay, where we could potentially be looking for longs to take out this high, which these wicks all near miss too, and potentially go a lot higher, but certainly that would be the target, okay? Now, what I did last night, I was forecasting. So you can see here, we come down, we near miss to that area, we move up very correctively, most likely because there's still orders down here and orders being placed there that need to be filled before we can move to the upside. So what I was looking for is previously, I'm just going to put my forecast on the chart. I'm going to put that guy back in his box. Leave that on the chart actually, because I think that's still relevant. Just tidy that up a bit, get it exact. So previously what I was looking for is I was looking for a push up when I did my forecast last night, a push up above these lows here, okay, followed by a tight flag, a tight 15-minute flag. Okay, so you can see the text there, a push up on the 1 hour followed by a 15-minute tight flag, and then I would be looking to filter that, a two-touch tight flag, looking to filter that on the 5-minute chart for a risk entry, which would be an entry within the flag, okay, after if we rejected these lows, and then I'll be looking to get long to the start of this kind of, just as a first target, the start of this kind of running channel there for something in the region of 7.5%. Okay, however, I was mindful of the fact if I just and then that would have, just to touch on it, if we'd had something like that, we would have retraced about 50% of this candle, but more so, we would have retraced, about 50% of this move here. We would be trading above that low, and above all of these. Okay, and as I said, we would have retraced approximately 50% of this bearish candle, because we do have to remember we have some momentum coming into that area. Okay, however, I was mindful of the fact that with that so much momentum, okay, we could see a scoop back down to tap below this, because we have to remember, what have I said before, that on the higher time frames we typically break below the lows if we're going to move to the upside, and the same is true on the flip side. So at this point, after this daily candle closed here last night, we'd only kind of wicked the area, we hadn't broken below it, so there was always the chance that we could come back down, as price may be doing now, to wick below that area before pushing up. Now, what we also have to remember is that we've now created a new high here, okay? So if I was to look to get long with a two-touch tight flag such as this, even if it was above here, okay, there's always a possibility that this could be relevant, this high. So when we've got a high such as this, I'm always waiting for, if we create a high such as this and I'm looking to get long, and I'm looking to get long above it, looking to get long above it would kind of confirm that this is not part of some kind of bear flag to push lower. But what, according to my documentation, would mitigate that further, and what would be the more sensible option, is to wait for a break above here, followed by a three-touch continuation. As I said in a previous video, the Saturday before last, I studied my past trades, and according to my data, I'd only placed 3 or arguably 4 losses on the break of, or within tight 3 touch continuations, not 2 touch ones, since August 2020. Okay, so if we got the push up above this new high that's been created and we get a 3 touch type flag, so that would be a push up on the 1 hour followed by a 3 touch type flag on the 15-minute chart, and then I would filter this on the 5-minute chart to look for the risk entry within it. That would be very deliberate, and that would confirm that some kind of 2 touch continuation wasn't just going to drop out, and then this just becomes some kind of bear flag to push lower, which it could do. Okay, because we have to remember that we have, even though we've near missed to that high on the higher time frames, we have kind of completed 90% of the move up to that area. So that's what I'll be looking for today. I'll be looking for a push up above this high, followed by a 3 touch continuation on the 15-minute chart, and then I'll look to get long either on the break of it or within it, and then I'll be able to manage it up to here as a first target. And then, of course, on the 4-hour, the 4-hour is very deliberate. As I've said, these swing highs and swing lows on the 4-hour chart each one of them is made up by an entire candlestick, an entire trading session's worth of price action. Okay, and we would also, just as you can see here, that high is also visible on the 4-hour chart. So if we pushed up and got that 3 touch that I'd be looking for, we'd be above a 4-hour swing high, and then that would be very deliberate, in my opinion, for a move to the upside. Okay, on the daily chart, that would look very, very bullish by that point. Okay, we'd have a big green candle like that. We'd be above this high, above this low, above this low, and then we would likely be moving up to take out these highs. What I would likely be doing from a management perspective, just because we would likely at the start of, if we got to this high there, okay, what's the risk to reward? Let's just measure that. Yeah, what I would likely be doing is, because I would anticipate if we pulled back. So if we just measure this, okay, from here to here, if we've pulled back all the way to here, which would be about 80% of that move or 75% of that move, we would likely be taking out that high, which this high near missed too. However, I would anticipate a lot of people taking profit here. Okay, so what I would personally be doing is I would be measuring the range. So I'll be measuring it from here to here. And then, because we know once we've completed 90% of the move, the price can pull back quite sharply. Okay, it can often pull back about 50%, and I don't want to leave all that profit potential on the table. What I would likely be doing is setting a take profit here whilst simultaneously trading my stop. So 90% of the range from here to this high here, where I would expect deeper pullbacks just by virtue of the fact that we have all this consolidation here. That would be a big move by that point, and that high there is visible on the 4-hour. It's also visible on the daily chart as well. So I would anticipate deeper pullbacks in this area, and then that would give me a risk to reward of about 6.98%. And of course, if we did get those, let's just take that off the chart a minute. If we did get those deeper pullbacks, then I would potentially look to, so if we pushed up to here, got those deeper pullbacks like that, then I would be looking to get long again if the risk to reward was there to take out that high that we near missed too. So that is Kiwi CAD. Of course, if price just drops out, then what we may be forming, if we just push a little bit lower, we may be forming some kind of structure like this, which becomes a bear flag to push lower. Okay, that's always an option as well, because we do have to remember as well, we may push a little bit lower. The reason we may be pushing a bit lower is because we do have volume here. Okay, you can see this volume here, which was the causation of the move to the upside, which was sat just below this area of value here. So that may be why we're kind of wicking towards that area, but we shall see. Okay, so this is not me. You might think this is a bit on the fence. It's not about being on the fence. It's about factoring in all of the negative. What I'm doing is I'm factoring in all of the positive and negative confluence factors about this trade, so that I don't blindside myself to things which I've learned to see, which you'll see that with a lot of egotistical traders. They know all this stuff, or they know a lot of this stuff, but they don't see it at the moment because their ego is blinded to what the market has to do to kind of prove them right. Okay, and then after the event, if they document, many of them are not documented at all. They look at their screenshots and they go, I should have really seen this. I should have really seen that. That has only happened to me twice in 2 years. Okay, my trades that I document have only looked different to me after the event. Okay, when I ASR, when I advanced self review them at the weekend, they've only looked different to me twice in 2 years after the event, because I don't I don't blindside myself with ego and having to be right. I see the same things in the moment after the event as I do in the moment, with the exception of these two trades, and that was actually because my psychology had been affected by the fact that there's things going on in my personal life to do with my partner who's got stage 4 cancer, which has spread to other parts of her body. My psychology was slightly affected by that, and there was things at the time that I didn't see. This is why psychology is important. I didn't see in the moment that I saw after the event, but otherwise, I don't blindside myself with ego or having to be right or anything like that. So that is Kiwi CAD. I hope you've enjoyed this video. I hope you enjoyed the little recap on dollar yen as to why we trade the way that we do and why I've taken it off of watch. But for now, have a great day, and I will speak to you again soon. Thanks for watching.